The gentleman from Texas, Mr. Green, is recognized.
Thank you, Mr. Chairman. I thank the ranking member as well. Thank the witnesses for appearing today. Ms. Wu, let's talk for just a moment about alternative data. I like to refer to it as additional data, but for our purposes today, let's talk about the invisibles and the persons who are non-scorables. We have a good many of them in the country. According to a report that I have from 2015, there were 26 million consumers who are invisible and about 19 million who are not scorable. Do we have enough of the automation such that these persons can receive credit scores based upon some of the non-traditional aspects of credit, utility bills, phone bills, light bill, water bill? Do we have enough of the automation to cover them in the process of scoring?
Thank you for the question, Congressman. So as I said earlier, with alternative data, the devil is in the details. What kind of alternative data and how it's used is important. In terms of automation, we've seen the rise of an entire sector of data aggregators who are able to tap into bank accounts and use cash flow to provide for credit underwriting, and this provides an alternative to the big three credit bureaus that's in the consumer's control. And the CFPB wrote this really great regulation under 1033 of Dodd-Frank that would have provided a great framework, strong privacy protections while promoting this kind of alternative data that is that gives consumers an option besides the oligopoly that's the big three credit bureaus. And you got to do we have to do this in the right way. So we have to think outside the box, and the box being the big three credit bureaus.
And with the utilization of what we're calling alternative data, actually you can still maintain the traditional credit data and have additional data added to that. It doesn't have to supplant, it can supplement. Is that a fair statement?
So yes, cash flow underwriting could be used in addition to traditional credit bureau data. And speaking of advancement, there was a question before about FHFA and using VantageScore in addition to FICO. I'd just like to point out that Bill Pulte has not approved the latest FICO scoring models to be used in mortgages. So, what are we doing if we're going to talk about alternative data and we're not even going to use the most recent scoring model, FICO 10T, which actually does consider rent and utility data? And I usually I'm not in the habit of defending corporations, but it seemed like it was making FICO compete with one hand behind the back, and that's not good for competition either.
Well, let's move to another area. I'd like to talk to you now about something that the credit scoring models don't pick up, and that is invidious discrimination in lending itself. Person goes into a bank, does not get a loan, who is qualified, and the person doesn't get the loan because of the person's skin color, the person's ethnicity. This still exists. Proof of it is the fact that City National Bank in 2023 agreed to pay $31 million to resolve allegations of avoiding lending to Black and Latino communities in Los Angeles. Lakeland Bank, 2022, settled with the DOJ for redlining in Newark, New Jersey area. So we still have this invidious discrimination in lending, and I have a piece of legislation, HR 166, that deals with this type of discrimination. It would establish an Office of Fair Lending Testing to test for compliance with the Equal Credit Opportunity Act, and this would ensure that persons injured by discriminatory practices can seek relief. But it would be in the CFPB, and we currently have an administration that is not enthralled with the way the CFPB functions, in that it does really help consumers. Do you have a comment on this type of invidious discrimination that exists, Ms. Wu?
Yes, Congressman, this kind of invidious discrimination still does exist. There's still a lot of it in the system. The CFPB is the agency that was supposed to root it out, but it's been sidelined. And the VOT-led CFPB is trying to water down the Equal Credit Opportunity Act to remove tools that are necessary to combat discrimination when it is invidious by removing the disparate impact standard from the ECOA.
Mr. Chairman, without objection, if it's at all possible, I'd like to introduce H.R. 166 into the record. It's the bill to establish the Office of Fair Lending Testing to test for compliance with the Equal Credit Opportunity Act.
Without objection.
Thank you. I yield back.
Gentleman yield.